scam. These are the table of contents. What is a corporate scam or fraud? It is very initial stage, so I have made it to explainable to all of you. So background of the Satyam computer science scam, timeline of the scam, what led to this scam, parties responsible for this scam, victims of the scam, what is a loophole in corporate governance, aftermath of the scam, recommendation, key takeaway, and reference document. So there are a lot of documents, references are available. So this is a landmark corporate fraud case. So what we call as a corporate scam, any illegal or unethical activity carried out or committed by company or people running the company constitutes corporate scam. These activities are generally committed to benefit any individual or any individual at the cost of consumers or investors, that is any stakeholder. So in 2009, India faced one of the biggest corporate scam, which is Satyam scam. So Satyam Computers was one of the crown jewel of the IT sector in 2000, which faced catastrophic consequences of corporate greed and ethical lapses. This scandal highlights loopholes in present auditing system, management system, centralization of power, and lack of transparency. So background of the Satyam Computer. Satyam Computer Services was established by Mr. Ramalinga Raju in 1987 with its headquarters in Hyderabad, India. The company gained prominence in IT sector, providing innovative solutions to global clientele. In early 2000s, Satyam was established as one of the India's prominent IT firms with the market capitalization of $7 billion. It grew so rapidly that it establishes its branches not all over in India, but in the 65 other countries also. It became the first Indian company to listed on global stock exchanges like New York Stock Exchange, Dow Jones, and Euronext, all three together. However, this rapid growth has concealed many manipulations in financial records. So why there was a manipulation? Because Mr. Raju, who was the CEO of the company, has an ambition to make Satyam as a high performing company. So he started fraudulent activities in from way back 2000 only. This manipulation involved inflating revenues, profits, cash balances in the company's financial statements. These fraudulent practices were facilitated through the creation of fictitious invoices, non-existing customer accounts, forged bank documents. For instance, revenue figures were overstated by approximately 7,000 crores. Company's cash and bank balances were inflated to reflect non-exist reserves. Forging bank statements, taking invoices, and inflating customer numbers were also part of these fraudulent operations. So these are the series, what has happened in a scam. These are the series of events starting from the incorporation of Satyam. So in 87, Satyam computers were launched in Hyderabad. In 91-92, debuts in Bombay Stock Exchange with the IPOs, which was subscribed 17 times. In 2001, became the first Indian company to be listed on New York Stock Exchange. In 2001, it crossed $1 billion revenue, and Raju became the chairman of the National Association of Software and Services Company, NASACOM. In 2007, he was declared as an entrepreneur of the year by Ernst & Young. The FIFA World Cups declared Satyam as their official IT service provider for the matches in 2010 in South Africa and 2014 in Brazil. In addition, Satyam also became the first Asian company to be featured in list of top 125 companies by Training Magazine for the category of workforce training and development. So many companies have hired Satyam for the training in IT for their employees. In September 23, 2008, the Institute of Directors awarded the Golden Peacock Award for Excellence of Corporate Governance of Satyam in the category of risk management and compliance issues. So far, they have received a lot of awards which were actually not to be. On December 16, 2008, Satyam Company announced the acquisition of 100% shares in Mitas Properties and Mitas Infra, which was known to be owned by Chairman and CEO of Ramalinga Raju's son. This proposed acquisition was about $1.6 billion, and that has to be cancelled within few hours of announcement because of strong opposition by the shareholders and investors. So investors and shareholders were not taken in the confidence. Only board of directors were taken in the confidence, and there were five independent directors were on the board, but they were really independent or not. That was a question mark, and only the CEO was given full authority, and as per his authority, he has done all these acquisitions. Because of the cancellation of this deal, the Satyam share price dropped 55% on New York Stock Exchange. On December 23rd, the World Bank banned Satyam as its customer for a period of 8 years. The reason given for the ban was found to conduct fraudulent activities, which included illegal incentive to the employees of the World Bank and irregularity of the cost of contractual documentation with the company's subcontractors. So they illegally bribed the World Bank employees, and it has come out on December 23. On December 25, Satyam issued statement apologizing the World Bank and requested to stop this prohibition on them because it was a loss of reputation and goodwill of the company. On December 26, 2008, four directors from Satyam board resigned, one after the another. This included the independent directors Mangalam Srinivasan along with the other board members like Vinod Dam and Krishna Palepu. Board meeting was organized on December 21st, which was postponed to January. The delay was made by Satyam to buy themselves some time for the management restructuring that would be most likely proposed due to all the recent events. Not to mention, board of members of Satyam were planning to adjust their share purchases. To help their planning and strategy, Merrill Lynch was hired by the company. On January 2, 2009, the shares of the promoters of the company decreased from 8.6% to 5%. On January 6, 2009, the promoter share decreased further to 3.6%. DSP Merrill Lynch from the iBank of Satyam met with the Security and Exchange Board to talk about the area in the balance sheet of the Satyam company. Main revelation came on January 7, 2009, where their CEO Ramalinga Raju confessed to his activities and scam came to the public. And he has disclosed everything which has gone wrong, from ethics to the acquirement of Maida and all those things. And overall, company's profits were overstated by rupees 50,400 millions in total. And on January 8, 2009, all the Satyam's accounts were frozen by the Citibanks and other associated banks. On January 9, 2009, Ramalinga Raju and his brother were arrested by CID Andhra Pradesh police, and the charges of fraud, conspiracy, cheating, breach of trust, and falsification of records were put on them. On January 2009, the board of Satyam were reformed and investigation agency appointed three new directors to replace them. And the newly appointed director included Deepak Parekh, C. Achyutan, and Kiran Karnik. This constitution was done by the SABI and others to have a public confidence, in Satyam board. On January 23, 2009, PwC auditors and partners S. Gopal Krishnan and Srinivasan Talluri were arrested by CID Andhra Pradesh as a suspect in the Satyam scam. So, leading from the board of directors, those who resigned, board were replaced, their CEOs and MD were arrested, and ultimately, PwC auditors and their partners were also arrested. And ultimately, the auditors were also banned for the period of 2 years for auditing. So what has led to this scam? See, major this information came out in 2008. Even the fraudulent activities were going on from 2008, 2000, but the actual thing came into existence when CEO has announced the acquisition of Mitas, which was the related companies at the cost of $1.6 billion. This was to divert the funds of Satyam to their own companies, which were owned by their sons. And their shareholders and the public in general, investors were not in favor of that. And that has come that this acquisition was cancelled within the 12 hours of announcement. And this has spoiled their share of Satyams. So who is the party responsible for this scam? So there were three major people who were responsible. The significant role was the CEO, Mr. Ramalinga Raju. The second, the silent role is played by the auditor because a lot of bank statements and profits were all manipulated and they were done. There was either negligence for the played by the auditors or they have overlooked this and they were also party to this fraud. Third is the contribution of board of directors. Even though there were five board members which were independent, they were given full authority to the CEO, Mr. Ramalinga, and they were not playing any significant role, or they were not playing any as independent directors. So, who were the victims of the scam? There were two victims. One is a direct victim. Direct victims were investors, creditors, clients, and employees. And indirect victims or circumstantial victims were banks, partner companies, and affiliated businesses. The first one to react were the clients and customers of Satyam, who immediately went to re-evaluate their contracts with the company. Most of the clients have already stopped their contract. And after the exposure of scam, and because to avoid the bad reputation, they have gone to the other IT companies because of lack of trust in the Satyam. And because of decrease in clients and customers, company faced more financial hardship and fake assets were already blown to companies' finance and shares falling to the market along with the decreasing client base. The victims of success were very many, be it nationally or internationally, from direct victims or indirect victims. So, shareholders and investors and creditors of the company were directly hit with this sudden financial loss, just as the company was. Those with the money on Satyam's shares witnessed the most visible decline as the price of company's share fell lower by later day. Others were the victims of the scam were working, those who were working directly under Satyam. Its employees faced the issue of non-payment of their salaries for a good few months. Even that company was have money crunch due to this scandal. Additionally, the people who use Satyam shares as a securities or mortgage, they were also affected because those banks having this share mortgage were worried about the recovery of financial and non-financial exposure. So those were asked to repay their loans. So, what were the loopholes in the corporate governance? There were four major points. One is the absence of objective auditing system, because even though the major company like PwC were their auditor, there was it seemed that there was no objective auditing done by them, because even though the bank statements were inflated, there were wrong bank statements. Also, the wrong invoices were raised, wrong inventory was there, lot of income were shown, which was not there. Profit was also inflated. Still, the audit was not done properly. So either there was a negligence and there was a negligence on the part of directors of Satyam. Even though so much fraudulent activity was going on, directors were unaware of, or they have not given their best to go into the details of that. Third was the too much power in hands of the CEO. And Mr. Ramalinga Raju, who was the CEO of company, he was audited as a one-man company and as a board director. Then there was lack of check and balances because a lot of profit was inflated and it was shown on the books of account and real money was not there in the company. And auditors failed to audit this. So the recommendation as an outcome of all this, there was a recommendation by SEBI and all other agencies who was incorporated by SEBI to check the system. So they have recommended the following. There should be a balance of power between the board of directors and the shareholders. All the decisions made by the directors regarding the company and its operations should be disclosed timely to maintain transparency. Third, the interest of the creditors and shareholders of the company should be safeguarded when making decision of the company. Four, in case of the company makes any decision against the interest of its shareholders, the investors and shareholders should actively form an opposition and raise their voices against the said decision. Together, they can pressure the board of directors and the upper management of the company to listen their views and opinions. Shareholders should do their due diligence before investing in any company. They should also be active in their participation in the general meeting after the investment. The shareholder with a sizable amount of shares in the company, called blockholder, should assume the role of monitoring the upper management of the company. They can act as a check and balance system for the board of directors of the company. The directors of the company should be given the power and independence to lead and manage the company, especially for the independent director, who should not have any share in the company. They are working at even as a part of their salary. Any information regarding the finances of the company should be reported accurately and should be informed to the shareholders and board of directors in a timely manner. Good corporate governance must be practiced, and all the rules and regulations made by the government to promote them should be followed to the letter and in the spirit as well. These are all the recommendations made by the 2-3 committees and SEBI on the operating of the Satyam. So, what are the key takeaways? Satyam case proved that any wrong action or misdoing, scam or fraud result into serious consequences. The scandal serves as a reminder of the importance of the transparency, accountability, and ethical conduct in the corporate world. How greed, centralization of power, and negligence can lead to the biggest ever scam, which has led to the loss of confidence of the investor and breakdown of economy in the Indian corporate history. The revolutionary changes that are brought in the company laws and corporate governance as a result of these scams are impactful. The most vulnerable parties, that is, investors and shareholders, got more protection due to the changes in corporate laws in event of any loss to the company. Because of reforms in the laws, shareholders and investors got not only more power to voice their opinion, but band together and oppose if they feel that company or board of directors are acting against their interest. This good learning also for Indian corporate sector about how ethical and transparent governance needs to be. These are the references. Satyam scan case study of the on 5 paisa, then on lawful legal, then it was on Wikipedia, and there is a Satyam store story. These are the 5 references were referred while creating this document. Thank you.
Very good, very good. Quite an in-depth one. 25 slides. Subodhji, what an effort. Really appreciated effort. And you have dug out the full story here. So I think this is one of those well-documented stories. Yes, presentation could have been better. But overall, it is, I think you made a point. You have covered all parts of this Satyam scam. And there were a lot of learning from corporate governance point of view, specifically in this scam. What was interesting for me was that even though we had this scam, which was completely manufactured, made in India scam, learnings are still not been incorporated by the new corporations. So apart from that, of course, I believe this scam will keep us teaching going forward in our life, and a lot of learnings will happen. With that, let me go to